UGI Corporation, a utility company that most people probably haven't heard of with an exceptional track record. But is it still a buy today? Stick around to find out. How's it going, everyone? Stock Ninja here. This is episode 12 in the Who Beat the S&P 500 series. Taking another visit to the utility sector, we will look into UGI Corporation. Let's get right into it. Founded well over 100 years ago in 1882, UGI was initially incorporated as United Gas Improvement Corporation. The company currently has a few subsidiaries, namely AmeriGas, Avanti Gas, Antra, and Flaga, with Flaga serving areas in Europe. Definitely nice to see a utility company with operations in Europe giving some diversity and international exposure. Let's see what kind of returns UGI would have given us over the last 20 years. Had you invested $10,000 into UGI exactly 20 years ago, with dividends reinvested, you would be sitting on a tidy sum of $129,875.44 versus the $31,195.20 of the S&P. That's an amazing 1,199.04% total return, beating the returns of the S&P's 212.18% by nearly 6 times, which comes out to an excellent average annual return of 13.67% versus the 5.85% of the S&P in the same time frame. Overall, very solid returns for a smaller company. Don't forget to hit that like button and subscribe to the channel for more content like this in the future. UGI currently has a market cap of around $6.8 billion and fittingly trades with the ticker symbol UGI. Listed within the utility sector with an industry focus in utilities, regulated gas, UGI currently trades on the S&P Midcap 400 Index, or otherwise known as simply the S&P 400. The S&P 400 Index serves as a barometer for the US midcap equity sector and is the most widely followed midcap index. To be included in the index, a stock must have a total market capitalization that ranges from $2.4 billion to $8.2 billion at the time of addition to the index. With the quarterly dividend payment, UGI is currently yielding a good 3.97%, which comes out to an annual payout of $1.32. The payout ratio is also decent at 59.45%, showing the company is in a comfortable position to keep paying out the dividend. When looking at dividend growth, we can see a decent 10-year CAGR or compound annual growth rate of 8.64%, and that CAGR has been pretty consistent for both the 5-year as well as the 3-year. The standout statistic is probably UGI's 32 years of dividend growth. They have increased their dividend through the last 2 recessions and look to do so for the foreseeable future. Given UGI's excellent dividend history and consistency. On top of that, according to SimpliSafe Dividend, UGI has a dividend safety score of 99, which is the highest score they award on their website, further reinforcing the safety of the dividend. The stock will be a good addition to a dividend portfolio for anyone looking for stability in payments. UGI's fiscal year runs from October through September each year. With that in mind, let's take a quick look at their revenue the last few years. In the fiscal year 2019, we can see revenue came in at $7.31 billion, but that is actually down 4.48% year over year from 2018. What is concerning is that revenue has had a large dip in 2016, but recovered sharply and is now suffering once again. Not the consistent growth that we as investors would like to see. UGI's revenue is split 4 ways into the following revenue segments: AmeriGas Propane, UGI International, Midstream and Marketing, and UGI Utilities. Starting with their largest segment by revenue, the UGI International segment brought in roughly 34% of overall revenue in 2019. This segment distributes over 960 million gallons of liquefied petroleum gases, or LGP for short, in 17 countries throughout Europe. It also operates an energy marketing business in France, Belgium, the Netherlands, and the United Kingdom. This segment saw an 11.6% decrease year over year in fiscal year 2019. Next up is the UGI Utilities segment, which brings in roughly 32% of overall revenue. This segment operates a regulated natural gas distribution business that serves over 655,000 customers in portions of 44 eastern and central Pennsylvania counties and more than 500 customers in portions of 1 Maryland county. Electric utility serves more than 62,000 customers in portions of Luzerne and Wyoming counties in northeastern Pennsylvania. This segment saw a 4% decrease year over year in fiscal year 2019. Bringing in about 18% of overall revenue, the midstream and marketing segment consists of energy-related businesses conducted by indirect, wholly owned subsidiary UGI Energy Services LLC. This segment sells natural gas, electricity, and liquid fuel to more than 13,000 residential, commercial, and industrial customers in 11 eastern states and the District of Columbia. UGI Energy Services also conducts UGI's midstream natural gas business through its ownership of underground natural gas storage, gas peaking plants, and pipeline assets in various locations. This segment saw a 6.6% increase in fiscal year 2019 and was the only one to increase out of the four. Lastly, we have the AmeriGas propane segment, bringing in roughly 16% of overall revenue. AmeriGas Partners is the nation's largest retail propane marketer, serving over 1.6 million customers in all 50 states from more than 1,800 distribution locations. The business also sells, installs, and services propane appliances, including heating systems and propane power generations. This segment saw a 5% decrease in fiscal year 2019. Now, let's see how the company fared in the dot-com bubble crash, the Great Financial Recession, and how it's currently trading in the downturn in 2020. UGI fell 50.22% during the dot-com bubble crash, dropping almost exactly the same as the S&P's 50.41% decline, with UGI edging out the S&P by a hair here. Looking at the Great Financial Crisis, UGI fell just 35.25%, 22% less than the 57.61% decline by the S&P, UGI proving to be relatively solid in the Great Financial Crisis. During the downturn in 2020, this is where things get a little interesting. UGI fell 50.73% compared to the S&P's 35.59% decline, falling more than 15% than the overall market. Currently, UGI is about halfway up from the March lows and where the stock was trading back in February of 2020, which is similar to what the utility sector index has done as a whole. Headquartered in King of Prussia, Pennsylvania, with around 12,800 full-time employees across both the United States and Europe, UGI has been led by CEO John L. Walsh since April of 2013. Walsh currently leads an executive leadership team of 8 members who oversee various aspects of UGI as well as its subsidiaries. When looking at the stock performance since Walsh took over on April 1st, 2013, we can see a very weak 25.75% increase for that time frame, especially given how well the stock market has done over the last 7 years, even with the addition of the 2020 downturn. Now, let's take a look at which institutions have stakes in UGI. Coming in at 5th place with a 3.61% stake, we have our first European institution making the top 5 list with Deutsche Bank. Next up, we have State Street in 4th with a 6.02% stake, nearly double that of Deutsche. In 3rd place, we have Wellington Management with a 7.95% stake in UGI. Now, looking at the top 2, we have BlackRock coming in at number 2 this time with a 10.15% stake. And last but not least, Vanguard once again rounds out the top spot with a sizable 11.22% stake with total assets equaling nearly $623 million. A couple important risk factors to consider when looking to invest in UGI. Starting with the highly regulatory nature of utilities, it is important for UGI to maintain good relationships with regulatory bodies and policies. Given they are operating in both the United States and in Europe, they have to maintain on both ends. Also, high interest rates can negatively impact them. With utilities having a high debt load as is their nature, higher interest rates will likely hurt the company in financing new debt, but with interest rates currently low and potentially staying low for the foreseeable future, this could benefit UGI for the next few years. On top of risk factors, there are definitely some concerning things about UGI, and this is further magnified when looking at their stock price in the last few years. Even before the downturn in 2020, the company has been trending downward for some time. I looked a little deeper into this, and it seems that the largest concern is what happened after their acquisition of AmeriGas in 2019. Analysts were expecting better earnings in terms of revenue and EPS post-merger, but due to the surprisingly lower than expected results, the stock has started to trend downwards. That being said, the company has increased its dividend for 32 years, including last year, so management must have confidence that the company will turn around given some more time. In my opinion, UGI is a nice mid-cap company that investors have had good success with over the last 2 decades. That being said, the company has been struggling as of late, and adding the situation in 2020, their struggle has been amplified, with their merger of AmeriGas not yet generating the profits that analysts as well as investors have hoped. I believe it is too early to write them off. Also, as we have seen in the stock charts, the company is definitely trading much lower than it was from its peaks of nearly $60 not too long ago. Overall, there are definitely concerns with the company, but given all that, they have continued to pay solid dividends year after year, and probably will continue to do so. Would I personally invest in UGI as of right now? Personally, I would like to see more improvement in the earnings and get a better forecast for what the company expects to happen in the next fiscal year. It's tempting though, given the upside and solid dividend history. That wraps up our analysis of UGI. Thanks for watching, everyone. Please don't forget to subscribe to the channel. It really helps out. Till next time, Stock Ninja out. I am not a financial advisor, and this video is for educational purposes only. Please do your own research before buying or selling any stocks seen in this video.